In the world of business, knowledge isn't just power, it's your unfair advantage. This is Momentum, your deep dive into the books that shape the world's most successful leaders. Let's begin.
Have you ever looked at a company's net zero pledge and wondered, how on earth are they actually calculating that?
Oh, absolutely. It feels like every week a major corporation claims they'll be carbon neutral by 2030, but when you look under the hood, the math seems fuzzy.
Fuzzy is putting it lightly. Here's a startling reality. Nearly all corporate carbon reporting today is based on estimates, averages, and spending data, not actual measurements. Imagine trying to run your financial department by guessing your revenue based on the industry average. You'd be fired in a week.
Exactly. Yet that is precisely how the world's biggest companies are tracking their environmental impact. And for you, the ambitious leader listening right now, this poses a massive risk. You are under pressure from investors, regulators, and customers to prove your sustainability. But if your data is garbage, your strategy is built on quicksand.
You're stuck in a loop of Scope 3 frustration. You can control your own emissions, but you have no idea what your suppliers are really doing. So you use generic spreadsheets that tell you nothing about how to actually improve. You want to lead the market in sustainability, but you're flying blind without a dashboard.
It's frustrating, it's inefficient, and frankly, it leaves your company open to accusations of greenwashing, even when you have the best intentions. You know you need a better system, but does one even exist?
But what if there was a different way to think about this? What if we stopped treating carbon like a vague environmental metric and started treating it exactly like financial debt? This is the core question explored in Accounting for Climate Change by Harvard Business School legends Robert S. Kaplan and Karthik Ramana.
This isn't just a book about being eco-friendly. This is a hard-hitting business framework. Robert Kaplan is the man who invented activity-based costing and the balanced scorecard. He knows numbers, and in this work, he and Ramana propose a revolutionary system called E-Liability.
E-Liability. It stands for environmental liability. The core idea is brilliantly simple, yet it completely dismantles the current way we do things. Right now, most companies use the spend-based method. If I buy $1 million of steel, I look up a global table that says $1 of steel equals X amount of carbon, and I put that in my report.
Which is ridiculous. It means that if I buy from a dirty steel plant or a clean green steel plant, my report looks exactly the same because I spent the same amount of money. There is zero incentive for me to choose the greener supplier and zero incentive for the supplier to clean up their act.
Kaplan and Ramana argue that we need to eliminate these estimates. Under the E-Liability system, carbon is treated like a cost that travels down the supply chain. Let's create a story here to show how this works in the real world. Imagine you manufacture electric vehicles.
Right. So it starts at the mine. A mining company extracts lithium. They measure the electricity and fuel used to get that ore out of the ground. That total carbon output isn't just a statistic, it becomes a liability on their balance sheet. When they sell the lithium to a battery manufacturer, they don't just send an invoice for the cash owed, they send a transfer of the E-Liability.
This is the game changer. The battery manufacturer now owns that carbon debt. They add their own emissions from their factory processes to that pile. Then they sell the battery to you, the car maker. They pass the physical battery and they pass the total accumulated carbon debt.
By the time the car reaches the final customer, that vehicle has a precise audited number attached to it. Not an estimate based on industry averages, but the actual sum of all the carbon emitted across the entire chain.
Think about what this does for competition. Suddenly, you aren't just competing on price and quality, you are competing on carbon efficiency. If supplier A has a high E-Liability and supplier B has invested in green tech and has a low E-Liability, you are going to buy from supplier B to keep your own numbers down.
It unleashes the power of market forces. We don't need regulators guessing. We need procurement departments demanding lower carbon invoices. It turns sustainability from a PR exercise into a rigorous accounting discipline. It effectively eliminates the problem of Scope 3 opacity by turning everything into direct accounting entries.
It's a shift from reporting to accounting. And for a leader, that is the difference between guessing and managing.
So we've established that E-Liability is the solution to the data gap. It treats emissions as a liability that transfers ownership down the chain, forcing transparency and igniting competition.
It sounds perfect, but implementing this is where the rubber meets the road. This core idea is a game changer, but it's just the starting point of Kaplan and Romano's framework. The theory is sound, but the execution is complex.
Exactly, Ryan. Because once you decide to do this, you run into immediate hurdles. In the full deep dive of Accounting for Climate Change, we unpack the specific mechanics that make this possible. We talk about the blockchain imperative, why the system effectively fails without a decentralized ledger to prevent fraud.
We also cover the offset trap. Kaplan and Romano are very specific about why you absolutely cannot mix carbon offsets with e-liabilities. If you get this wrong, you destroy the integrity of the whole system. We explain exactly how to separate those two ledgers.
And perhaps most importantly for the managers listening, we break down the pilot strategy. You can't overhaul your whole supply chain overnight. The full summary details the beachhead strategy, how to pick one product line and one supplier tier to prove the model before scaling.
These are the details that separate a nice idea from a competitive advantage. You do not want to be the leader still using spreadsheets and estimates when your competitors start auditing their carbon like they audit their cash.
If you want to master the future of ESG and lead your company out of the greenwashing fog, you need the full toolkit.
Click the link in the show notes to unlock the full summary. Get the tactical steps to implement e-liability and future-proof your business. We'll see you there.